This is Dissecting the Market. I'm James, and today we're looking at Paysafe, aka Foley Trasimene Acquisitions. So for anyone that's not watched any of my videos before, I'll give you a quick rundown on what a SPAC is and what they do. Usually when a company wants to move from a private to a public company, they need to join the stock exchange, and this is done via what is called an initial public offering, or as it's better known, an IPO. This can be a very costly and drawn out process with many hoops to jump through and various legal contractual obligations to navigate, and can often take months or years. But there is an alternative, merging with a company that's already IPO'd. This avoids a lot of the scrutiny, costs and time involved. And that's where SPACs come in, or special purpose acquisition companies. They are companies created solely to merge or acquire other businesses and take them public. It's a cheaper and faster alternative to an initial public offering. The big drawback is this kind of investment is definitively more risky, as the companies don't have the same level of scrutiny that they would if they IPO'd. So that is definitely something to bear in mind when buying a SPAC. However, it does give you a good chance to get in early if it's a company that you really believe in. There's two things I really like about this merger. Firstly, Paysafe themselves look like a really great company, very investable, 100 billion of transactions already gone through. And Foley themselves, which have a really strong management team, and in fact I'll tell you a little bit about them now. Foley Trasimene was founded by a chap called Bill Foley. I won't go into too much detail, but Bill has a seriously impressive track record. He has 32 years experience, has led 6 multi-billion-dollar businesses to market, and has completed literally hundreds of acquisitions, including companies like Black Knight and Fidelity National. Not only that, but he built the largest title insurance company in the US, growing it from 3 million to 13 billion. I could go on, but it's safe to say this guy seems to know what he's doing, and he's joining the board of Paysafe after the merger.
We're going to be joined by Bill Foley. And as well, the CEO of Paysafe later in the 10 o'clock hour of Squawk on the Street. Don't want to miss that. Because he's a very interesting guy. Apparently
he's
great
fantastic.
vineyard,
The Dun & Brad is incredible.
Team.
The Dun & Brad was incredible. It was a losing company, it turned into a winning company, made a lot of money in no time.
So who is Paysafe and what do they do? Paysafe, in a nutshell, is a multinational payment solutions business. They help facilitate money transfers in various ways, from providing various cards like MasterCard, online gaming purchases, online betting, through to gym membership fees, property management payments, and even healthcare. In fact, this video would be ridiculously long if I had to go through all of the various businesses that they're involved in. It's seriously impressive. Imagine making a small fee every time an in-game purchase is made, every time someone makes their rent payment or does an online grocery shop. I mean, it's just something that I want to be part of, and it's why I'm really keen on this industry. They basically help companies take payments from customers. On the flip side, they also help customers make payments that otherwise couldn't. For instance, they offer prepaid and MasterCards for customers to load up with cash at various outlets so they can pay for stuff online. This could be good for people with poor credit, or possibly younger people, or even as a gift to someone. And they also offer a digital wallet and several e-cash solutions as well to customers. Online payments are growing faster than ever before, and Paysafe are already an established business with over 100 billion processed already. This makes this merger more attractive to most investors, as a lot of SPACs don't even have turnover. Just take a look at some of these names they work with. DraftKings, and you can see here they work with various US lotteries. Down here you can see the gaming section. They deal with Roblox, Fortnite, Stadia, YouTube, Spotify, Twitch, Paylease. Also, when you're buying Paysafe, you're buying the brands they own, including Skrill, Income Access, and PCS, just to name a few. As I mentioned earlier, it would be hard for me to cover in this video in detail everything that this company does. But suffice to say, this is a big brand in an industry that's growing fast. So looking at the chart, this has obviously already had a little run and it's up 40%, so sadly I'm getting in a little later than I would have liked. However, we did have a little pullback yesterday, so I'm going to use that as a buying opportunity to start a small starter position. But just to reiterate, I'll be buying these knowing full well they could pull back. Although obviously I hope they don't, but these SPAC stocks can be quite volatile. So make sure if you do decide to invest, you do your own homework and take this extra risk into account. However, I'm pretty confident longer term this could be a really good investment. And whilst we're on the subject, I've seen a lot of confusion online and amongst other YouTubers about the actual valuation and the stake in Paysafe we will be buying. The confusion has started with this chart, listed in the Investors Relation document. It only shows Foley as having a 4% stake, and with Foley currently valued at 2.5 billion, this would give Paysafe a market cap of over 65 billion. But this obviously isn't the case. If we look a little closer, we can see that the 22.5% is assigned to SPAC and Cine. SPAC is obviously us. Now it doesn't specify the exact amount, but we can do a little math to work it out. We know that when the deal was agreed with Foley, Paysafe was valued at 9 billion and Foley was selling for about $10 a share. With 183 million shares and Foley's shares trading at $10, that would give them a market cap of 1.83 billion. So now we know that Paysafe was valued at 9 billion and Foley was valued at 1.83 billion at the time of the deal. This would represent just over 20% stake in Paysafe. Foley are currently up about 40% from that time, which values them now at just over $12 billion now. Far less than the $65 billion that everybody's saying online, but still quite expensive. Saying that, looking at their market cap and then looking at the future potential market, I think it's still quite a good buy. If you like this video, please remember to give it a like and subscribe to my channel for future videos. Thanks for watching, I'll see you on the next one.